Is it time for Nike to fire CEO John Donahoe? And it's not just me that's going to be bringing up that question on today's show. Many people have been writing about this fact that he came in with basically no fashion experience, and we could get any white-haired CEO to put up the type of performance that Nike has been doing his 5 years in business as the CEO of Nike. Over the past 5 years, Nike shares have drastically underperformed virtually every other stock, let alone kind of the high-tech AI stocks that have been exploding just over the past year or two. Just a 14% gain over the past 5 years for Nike, and that has many calling for the head of the CEO of Nike. And this comes under context after the company reported their Q4 earnings. We'll get into them. We'll take a look at some of the recent news that Nike has been making over the past quarter since our last video on the company, and then we'll look at this financially. And again, I think we can get anybody watching this video to put up this type of performance. This company needs a transformation. And speaking of that, we are touching a mega trend on this stock that has really been in place for really the past 30 years or so. And if you break down lower than this, it is going to be an all-out disaster for Nike. What is going on, investors? Hopefully, you guys are doing well out there. We're obviously talking about Nike. And as a shareholder of the company, I'm going to be particularly fired up. I was not fired up when the company announced that John Donahoe was the new CEO. He has no fashion experience. He didn't do jack crack at eBay. I've never been impressed by this guy. And when you go through the financials at Nike, you're not going to be impressed either, because over the past year, you had revenues decline 1.7% to $12.6 billion. How does a company like this miss expectations by nearly $250 million? The expectations was for closer to $12.86 billion. The high-end estimate on Wall Street was for $13 billion, and you came in at $12.61 billion. That was just a shade over the low-end estimate. As we start to look forward with Nike, it brings into question if this company is going to be able to turn it around in the next couple of quarters. $12.5 billion, $13.1, negative growth year over year in the next 2 quarters. You will pick it up in the fiscal third quarter. At least that's according to analysts. Now, the company, for their part, has been cutting their way. As we go through the financials, it's not a complete disaster, because you're going to see year over year, income before income taxes is up 39%, despite stagnating flat revenues, relatively flat gross margins. The company has been on a cost-cutting mission, and that is maintaining profits over this company. But that's not what this company is in business to do. It's in business to dominate, and that's not what cost-cutting does. They've eliminated jobs across the board here in the United States, also in their European headquarters, as they're trying to cut $2 billion in costs. You can't cut your way to greatness, and Nike's going to figure that out. Citigroup found in a survey that Nike is losing traction to Adidas. I'm not exactly sure who they surveyed there, but Adidas is also a brand that has fallen off after they got rid of Kanye. Converse is cutting jobs. Converse is wholly owned by Nike, and they're also doing cost-cutting measures over there. They're finding that sneakerheads are losing interest and spending less. This is a Nike problem, not a sneakerhead problem. These guys have money, they have jobs, they spend most of their disposable income on sneakers, and it's up to Nike to innovate and get them to continue to buy. Now, the company did a nice job securing, I think, one of the biggest endorsement contracts probably to come along over the past several years, as they locked up Caitlin Clark. But where's her shoes? Where's her merchandise? Where's the cool advertising surrounding Caitlin Clark? She's created a lot of conversation about women's sports, about how she's being treated in the WNBA. All these things are ripe for storytelling, ripe for advertising. I have not seen one good advertisement for Caitlin Clark. I have not seen one product of hers. And here's one of the biggest stars in all of sports, Nike, absolutely dropping the ball. And this is the guy to blame right here. He has no advertising experience. He has no fashion experience. This guy, all he's doing is massaging these numbers and making it look semi-decent. And that is why the stock is basically underperformed and getting crushed in the after hours. Talk about how revenue came in at $12.6 billion. That was, again, disappointment year over year on that revenue side, disappointment from the expectations. That was down about 2%. Now, they've squeezed out some gross margin, inflationary environment. You're able to pass some cost increases onto the consumer, and they're willing to pay for it. Now, demand creation expense, this is the type of endorsements that's basically been flat year over year. Your overhead expenses, this is all your employees and all that other stuff, that's down 9%. So they've slashed cost over at Nike, and here's your total selling general administrative expenses down 7% year over year from $4.4 billion down to, we'll call that $4.1 billion. So when your revenue basically is in decline or basically flat, but you slash your expenses, well, you come down here to net income, and it ballooned 45% over the last year from $1 billion up to $1.5 billion. But again, that is not what investors in Nike want. We're not looking for cash flow. We're not looking for profits on this company. But that's what a guy like John Donahoe, that's all he can deliver. That's all he can muster up is financial engineering, cutting costs, cutting jobs, cutting staff in order to bolster up the net income. I mean, the demand there's a flat line of demand that's always going to be there for Nike products. They've built up their brand over the past 30 or 40 years. There's always going to be demand for the products. But now we need a level up in innovation, a level up in advertising, and they don't have the guy in charge that is going to deliver that. Cash and cash equivalents still relatively high, balanced off by a small amount of debt. What I've noticed over the last year is they continue to reduce the number of inventory they have, down 11%. Look, anybody can sell through inventory and not create new products to come in underneath and kind of behind it. Anybody can do that. Anybody can lay off some underperforming workers or even just workers around the globe and reduce our overhead expenses. But can we create a really cool advertising campaign about one of the most compelling athletes in the world right now? And Nike just isn't doing that. I've seen Caitlin Clark in Xfinity ads. I've seen her in a Gatorade ad. I've seen her in a State Farm ad. I've yet to see her in a Nike ad. What is this company? What are they actually doing? Maybe they should fire more people because it doesn't seem like they're doing a whole lot. Now, year over year, the footwear, North American footwear, the key business of the whole company, down about 6%. In Europe, also down about 5%. In China, the bright spot for this company is in China. Footwear is up 2%. APAC, you were basically flat. In the Western markets, North America and Europe, you're seeing total sales basically go flatline. Again, a lot of that has to do with advertising. Some people might blame it on the economy. I don't. Greater China up about 3%, which in a tough China environment, probably not that bad. Wholesale and direct basically flat, as you'd expect when it comes to the company's financials. And then across the board, profits are up because, again, the company is simply just cutting their way, not innovating, not spending more on athlete sponsorships, as again you saw on that demand creation expense, which is essentially marketing and endorsements. That is flat year over year. Give me a flat budget on marketing expense year over year on Nike, and this is exactly what is going to be delivered. Now, from a technical perspective, when things are at its worst, when you want to get rid of the CEO, when over the past 5 years the stock has basically done absolutely nothing, this is absolutely when you step in and you buy. Technically, we are at the bottom of the channels. We wait for these days. People always complain, why aren't you saying buy, buy, buy? Be like Jim Cramer. Come out with a video every day saying you're buying this and buying that. I don't do that because we are patient and we wait for the right moments. And here we are with Nike at the bottom of the channel. This is your moment to step in. And I always say this, when you're at the bottom of these channels, it is painful to buy because the CEO probably not doing a very good job. The revenue numbers and the revenue growth is going to look absolutely terrible. The financials, not that bad over at Nike considering how much they've cut cost over the past year. When you're at the bottom of the channel, it's never easy buying, but this is when you step in. Now, to protect yourself a little bit, there are stop loss areas. You really wouldn't want to see this stock get much lower than where it's at. In the after hours, trading at about $88 per share. I'd probably have a stop loss 10% lower, $79, $80. You meaningfully break below this trend line. We have touched our way through it. It's usually during some type of financial crisis or during some kind of recession. It's rare it happens in kind of a roaring bull market as the market is setting new highs. So things are not good over at Nike. The financials, though, still look like in a good place. If this company can get some leadership at the helm, create some great, meaningful advertising, actually create products around your greatest assets, which is the athletes, stop trying to cut your way to higher and higher profits, since that is not what investors are really interested in. We know we get a dividend. We know you're buying back the shares over at Nike. What we're looking for is an increase in sales, as you have other brands, Lululemon, Adidas, Under Armour, many of others are fledgling and struggling as well. This is a time when you take a market leadership position over at Nike and you start crushing the competition. Right now, the company doesn't have the leadership in place, but I will be buying shares of Nike likely tomorrow morning. Hopefully you guys enjoyed today's video. We'll be back again. Well, it's almost Friday tomorrow with the Fang Stock Recap Show. Until then, good luck with your investments.